All right, so this is going to be another concept that's going to help us actually find the higher probability setups in terms of support and resistance, supply and demand, and in terms of our methodology overall, because this is really what's going to be helping us in making these decisions when it comes to our supply and demand levels and our support and resistance levels, and that's going to be buying and selling pressure. Now, the concept itself is very similar. It's very easy to understand. It's nothing more than as simple as when buying pressure is occurring in the market, is when the majority of traders are buying thinking that price will increase. Vice versa, when there is selling pressure in the market, selling pressure occurs when the majority of traders are actually selling thinking that price will continue to decrease. Now, one thing you have to remember is that for every single buyer, there has to be a seller willing to sell him those contracts or whatever the case might be but what happens is the volume itself. The buyers are going to have more volume, meaning that there's more buying pressure than there is selling pressure, and the sellers are going to have more volume when there's more selling pressure than the buyers, meaning that they're looking for price to go short. Now we're going to go into the actual charts and look how we can incorporate this into our trading and actually look for live examples. So now that we're in the actual chart, and pretty much what we're going to be doing is starting off by actually marking off our major levels of support and our major levels of resistance, but I kind of want to do this with our supply and demand levels, right? So what we're going to be doing is looking at it from a bigger picture perspective, right? Notice how at one point in time there was actually buying pressure at this specific price, and then we had a second rejection. Notice how buyers came into the market at this price here, and then notice the big reactions we had each and every time after price actually rejected this. This gives us an indication, and again, what you want to look at is the move itself. This gives us an indication on how much buying pressure there was at this level of supply and demand at one point in time. But notice how sellers actually broke through this level of supply and demand, that there wasn't enough buying pressure. Again, once this level actually broke, there wasn't enough buying pressure like there was here and here for buyers to actually continue to hold this price. Not enough people were looking to continue to hold that level in terms and create a new buying opportunity, and sellers broke right through that level, right? Now that sellers have broken through this level, look at the selling pressure that this previous level of resistance or previous level of support or supply and demand had all this buying pressure. Right now that sellers are broken through, look at how they're starting to form some selling pressure at this area. Notice how price tried trading higher and tried trading above, because remember, but you want to think about it as a tug of war, you want to think about it as a battle. Look how many times sellers fought to break through this level. When they finally broke through, what's the probability of sellers actually holding this level, and how much pressure or how much selling pressure is there going to be at this level to create another opportunity for us to actually look to hop in on a short position and see if price actually goes short? Well, look at all this selling pressure that's currently going on here with this current price action, right? Notice how buyers tried pushing price up, big rejection. Notice how buyers tried pushing price higher. Day after day after day, we had another huge rejection. Now price is currently trading here, and again, we're really going to see the buying or selling pressure at this point in time during London session or New York session, where more volume starts to come into the market. Because remember, what causes these breakouts are the amount of orders being placed and the speed of which those orders are actually being placed, which we will see in the data printed here on these candlesticks. Right. So again, the more selling pressure there is, the more volume there will be for price to actually go short. Now, very simple concept. I don't want to keep it more than that. And it's literally the same exact thing, vice versa, when it comes to buying pressure. Want to keep it short, want to keep it simple, because this isn't something I want to spend too much time on, because the concept is so simple, and you'll pick up on it very quickly. If you have to, just rewatch the video. But I don't want to make it more complicated than what you have to really understand and how it's really going to be incorporated into our trading, because the more you start making things complicated when it comes down into trading, the more difficult your trading is actually going to be, and you don't have to know every single detail of why this terminology is called this and why the market does this when it hit or why the market does this, and know every single detail to become an excellent trader. Really, you have to be able to just manage your risk. So I don't want to focus too much on concepts that are so simple and break them down to the T. Right, the concept should be fairly simple when it comes down to buying and selling pressure, when it comes down to your support and resistance or supply and demand levels. And again, this applies to both support and resistance and supply and demand.